to my channel Tutelage, a guide to learner. Here, this is Sriparna. Hope all of you are doing well. So, learners, in my previous session, we have already discussed some question answers on economics of the different boards like Karnataka State Board, Uttar Pradesh State Board, etc. And you all know why we are discussing it. We all know state board schools are one of the most important educational institutions in every state, so we do not ignore it. If I am not wrong, mostly 60 to 65% students are dependent educationally on state board schools because fee structure of these schools are cheaper than the ICSE CBSE school, and not everyone gets chance to study ICSE CBSE schools due to insufficient amount of money, etc. Apart from many reasons, everyone can't afford it. So that's why today we are going to discuss some model question paper of the state board schools, and this type of question paper are not so much available in the social platform. So that's why we are going to explain it. Okay. We are discussing model question paper on economics, and which is basically related to the macro part, mostly micro and macro part. So I hope this session will be a very useful session to everyone. So let's begin the session and move on the main slide. And if you have missed my previous session, so please go and check it once. My all previous sessions link is available in my first comment and my description box. I hope it will really be a grateful uh, session to everyone. Hello everyone, welcome back to my channel Tutelage, a guide to learner. Here this is Sriparna. Hope all of you are doing good. So learners, in my previous session we have already discussed some question answers on economics of the different type of state board like Karnataka State Board, Uttar Pradesh State Board, etc. And we know state board schools are one of the most important educational institution in every state. So we don't ignore it. If I am not wrong, 60 to 65% students are dependent educationally on state board because fees of the state board schools or monthly expenses regarding education are cheaper than ICSE CBSE school, and not everyone can't chance. Hello everyone, welcome back to my channel Tutelage, a guide to learner. Here this is Sriparna. Hope all of you are doing well. So learners, in my previous session we have already discussed some question answers on economics of the different state board like Karnataka State Board, Uttar Pradesh State Board, etc. And we all know state board schools are one of the most important educational institution in every state. So we do not ignore it. If I am not wrong, mostly 60 to 65% students are dependent educationally on state board schools because fees of the state board schools or monthly expenses are cheaper than the ICSE CBSE school. Not everyone gets chance to study ICSE CBSE schools due to insufficient of money, etc. So apart from many reasons, everyone can't afford it. So, learner, we are going to explain some question on economics and mostly related to the micro and macro part. Okay, and the model question paper of the state board are not so much available. The solved model question paper of state board are not so much available in the social platform like YouTube, and that's why I took an initiative a few days ago. So this session is going to be a most probably fifth or sixth session. Okay, so I hope you all like it. If you have missed my previous session, so please go and check it once. I hope it will be a really helpful or useful to everyone, and all previous sessions links are available in my first comment and my description box, so please check it once. Let's So, Leonard, if you have missed my previous session, so please go and take it once. I hope it will really be a helpful session to everyone. So, all previous sessions links are available in my first comment and my description box. So, please do check it once. And let's start the session and move on the main slide. So, Leonard, here we can see some question answers on economics. So, let's start. So the first question is net investment is equals to the first six questions are MCQs, okay, and which are four options. So the first question is net investment is equal to, so there are four options: gross investment plus depreciation, gross investment minus depreciation, gross investment minus indirect taxes, and last option that is none of the above. So at first we have to know what do you mean by investment. So basically investment is a financial assets, okay, and it is basically a purchase of goods and that are not consumed today, okay, which is not related in future, basically which is related in the uh, future which is basically related to the future. So, learner, we can see some question answers on economics and now go to the first question. So, the first question is net investment is equal to. So, first six questions are basically MCQs and which are four options. So, the options are for the first question, that is gross investment plus depreciation. The second option, that is gross investment minus depreciation. The third option is gross investment minus indirect taxes, and last option, that is none of the above. So at first we have to know what do you mean by investment concept in economics. So investment is basically a financial assets, okay learner. So basically it is the purchase of goods or services and that are not consumed today but which is used in the future to generate wealth. So investment is not related the present term, which is related in the future, and one of the most important goal of investment, that is it helps to generate income of the individual. So net investment that equals to option number B, that is gross investment minus depreciation. Okay, so option number B, gross investment minus depreciation, is the correct answer for the particular question. So now move on to the second question. Which of the following is the common accepted definition of money? So we have already told what do you mean by a money and what is the actual definition of money. So if you have any doubt on it, so please do check it once my previous session on the concept of money, okay, and which and their link is in my description box and my first comment. So now move on to the options for the second question. That is, first option is any good which is commonly accepted as a store of value only. Second option, any good which is exchanged for gold at a fixed rate. Now move on to the next slide for showing two options, okay. The third option is any good which is acceptable to a bank. The fourth option, any good which is commonly accepted as a medium of exchange. So we all know that money is basically a particular good which is commonly accepted as a medium of exchange and which is mostly uh, accepted definition of money. So option number D is the correct answer for this question. So now move on to the third question. Consumption function is a functional relationship between income and saving. Option number B is price and consumption. Option number C is income and consumption. And option number D is consumption and saving. And we can see B, C and D options, consumption is included here. So that's why these are not the correct answer. So consumption function is a functional relationship between income and saving. So in economics, income is denoted by Y and consumption is denoted by C. Okay, an individual spends some amount of money from his income, so that's why he has Y minus C. That means which is called savings, which and saving is denoted by S. So that portion of money, that amount of money is saved by individual. So consumption is basically the use of goods and services for the satisfaction of the individual needs or wants. And for example, we can say the purchase of new pair of shoes, and which gives the satisfaction of the human need. So from this relationship, from this equation, we can say consumption function is a functional relationship between income and saving. So option number A is the correct answer. So now move on to the next question, fourth question. The difference between fiscal deficit and interest payment is called option number B, that is primary deficit. So we can see here there are four options. First option is revenue deficit, primary deficit, budget deficit, and capital deficit. But the difference between fiscal deficit and interest payment is called primary deficit. And primary deficit, so that's why we can say primary deficit is referred to as the difference between that exists between the fiscal deficit in the current fiscal year and interest payments that was needed to be paid in the previous fiscal year. So that is the basic relationship, that is the basic basically related to the primary deficit. So fiscal deficit and interest payment, and here we can see the difference between fiscal deficit and interest payment is called primary deficit. So option number B is the correct answer. So now move on to the next question. The exchange rate which is determined by the government is known as, there are four options: flexible exchange rate, fixed exchange rate, floating exchange rate, and none of the above. So those exchange rates are determined by the government. So these are known as fixed exchange rates. So option number B is the correct answer. So now going to the next slide. So the sixth question is, what is macroeconomics? So we have already told what do you mean by a macroeconomics, microeconomics. So if you have missed my previous session, so please go and check it once. My previous session's links is my first comment and my description box, and I hope it will be a really helpful to everyone. Okay, so now going to the definition of the macroeconomics. Macroeconomics basically a branch of economics, and economics is of two types, micro and macro. So macro means large. Okay, so that's why macroeconomics dealing with performance, structure, behavior, decision making of an economy as a whole. So, macroeconomics deals with the study of the whole nation. So, that is the definition, that is the basic concept of the macroeconomics. Okay, so now move on to the next question. Next question is, what is central bank? So, which is most common question in economics, and central bank is basically the what is the name of central bank of India in India. So, central bank of India, that is RBI, that is Reserve Bank of India. So, the definition of central bank is a public institution that manages the currency of a country or group of countries and controls a money supply, literally a amount of money in circulation. So those bank is basically manages the currency currency or amount of money of a country or a group of a country. So those banks are called central bank. So RBI is the central bank in India. Okay, so now going to the next question. So the next question, that is, what is tax? So tax is one of the most common word in our daily life. So that's why what do you mean by a tax is very common and mostly known question, known answer. So in economics, tax is a mandatory fee or financial charge which is levied by any government on an individual or an organization to collect revenue for public works, providing the best facilities and infrastructure. That is called, that amount of money is called tax. So, tax is a mandatory financial charge which is levied by the government for providing best facilities and infrastructure to everyone. So, do you know, learner, what is the basic purpose of tax? So, basically, the purpose of tax is to provide the government with funds for spending without inflation. That is the one of the most important purpose of tax. I think this is clear. So, now move on to the next question, and here we can see a mathematical question. Okay, so calculate revenue deficit if revenue expenditure is 22250 crore and revenue receipts is 17750, and we all know that the formula of the revenue deficit is equals to revenue expenditure minus revenue receipts. So that means 22250 minus 17750. So 4500 crore is the correct answer. Okay, so this is the revenue deficit. So now going to the next question. So 10th question is, what do you mean by balance of trade? So balance of trade is difference between in value over a period of time between a country's import and export of goods and services. So basically balance of trade is the difference between export of goods and services of the country minus imports of goods and services of the country. So basically balance of trade, that is 1 minute, BOT in a short form, equals to export, which is denoted by in economics X, okay, capital X, minus import. Import is denoted by in economics capital M. So BOT, balance of trade, is basically the difference between export minus import. I think this is clear. So now going to the next question, mention the components of the balance of payments. Balance of trade and balance of payments both are different. Both are different. Okay, so balance of trade is basically the difference between export and import, but balance of payment, so next question is components of the balance of payment. So here we can see there are three components. First component, current account, capital account and financial account. So obviously balance of payments are related to these components. So that's why balance of trade and balance of payments are different concept. Okay, so components of the balance of payments are current account, capital account and financial account in the budget. Now move on to the next question. What is the deficient demand? So what do you mean by deficient demand, learner? So we all know that deficient means decreasing, okay, in a simple terms. So deficient demand is a situation when aggregate demand is a short of aggregate supply. That means aggregate demand less than aggregate supply. So deficient demand is related to the concept of aggregate demand and aggregate supply in economics, and which refers to a situation when aggregate demand is less than aggregate supply, corresponding to the full employment level in the economy. That is basically related, that is known as deficient demand. And now going to the definition slide. So deficient demand refers to a situation wherein aggregate demand in the country falls short of aggregate supply of goods and services at full employment. So we have already discussed deficient demand is equals to aggregate demand less than aggregate supply at full employment level in the economy, and deficient demand leads to a fall in income level, fall in output and employment, and which leads to a state of depression also. So I think this is clear. So now move on to the next question. Question is distinguish between stock and flow variables. So we have already discussed it in my previous session. So here we can say stock refers to any quantity that is measured at a particular point in time. That means the year 2021. So this indicates a particular point in time. So stock refers to any quantity that is measured at a particular point in time, which is known as stock. And on the other hand, flow is referred to as the quantity that can be measured over a period of time. So over a period of time means 2022 to 2025. So over a period of 5 years. So which is related to the flow concept. So in the stock concept, there is a fixed time that is called 2021, the year of 2021. But in the flow concept, there is no fixed time period. There is a period of time period which indicates the year from the year 2022 to 2025. I think the concept of stock and flow variables is clear to everyone. So now move on to the next question. What is government budget? So government budget is a document that presents a governing body anticipated revenues and proposed spending for a fiscal year. So that means budget, government budget, which is related to the government, which is related to the main body of the country, and which is known as government. So government budget is a document which presents a governing body's anticipated revenues and expenditure for a particular fiscal year. I think what do you mean by a government budget is clear. So now going to the next question, and where we can say one of the most important question of economics, that is what is national income. So according to the Don Bush and Fisher, um, national income is the value of final goods and services which is produced by the domestically owned factor of production within a given period of time. So within a given period of time is a very important in the definition of the national income and domestically owned factor of production. So do you know, learner, what are the factors of production? So we have already known there are four factors of production: land, labor, capital, and entrepreneurship. So according to the economists Don Bush and Fisher, national income is the total value of final goods of services, not the intermediate goods and services. The value of final goods and services, and which is produced by domestically owned factors of production within a given period of time. So which is known as national income. Okay, and now going to the last question for this session, that is distinguish between GDP and GNP. So we have already known the full form of GDP and GNP. That's why we haven't explained it. So GDP denotes gross domestic product and GNP denotes gross national product. So what is the difference between GDP and GNP? There is a difference. Okay, so GDP basically is the total money value of the final goods and services which is produced within the geographical boundaries, which is produced by domestically owned factor of production, that indicates within the geographical boundaries of the country during a given period of time This is known as gross domestic product. But gross national product or GNP refers to the money value of the total output or production of the final goods and services which is produced by the nationals, which is produced by the people of the country during a given period of time, generally a year. Because in the concept of GNP, there is no geographical boundaries of the country. So that is the basic differences between GDP and GNP. GDP indicates the limited geographical boundaries, and GNP indicates there is no geographical boundaries. So, total money value of the final goods and services which is produced by the people of the country during a given period of a time, that is called GNP or gross national product. But the total money value of the final goods and services which is produced within the geographical boundaries of the country during a given period of time is known as gross domestic product. I think this is clear. So, learner, these concepts are clear to everyone. We haven't discuss the topic in detail because in my channel each and every topic is very well discussed, and if any of you are missing then please go and check my first comment and my description box. So learner, we are done for the today's session. If you like my video, so please do one like, one comment and one subscribe, and please do some support and subscribe to my channel for getting another new session. I will come again with a new exciting session. Keep commenting. Thank you all. Happy learning.